A top European Union official said on Monday that the worsening situation in Ukraine is hurting the Russian economy more than the economies of the EU. So what is the economic situation in Russia at present? Alexei Devyatov joins me down the line from Moscow to share his insights. Alexei, given the moves of the central bank, which has hiked its primary interest rate by 2.5% over just the past 2 months, it has been suggested that the Russian economy was on the verge of a recession, and the geopolitical concerns have only intensified the situation. Are these claims justified to your mind?
I believe that the increase in the key rate will certainly not help the economy. The central bank's primary target is inflation, and they are concerned about rising inflation. That's why they increase the rate, but it's going to be not very good for the economy. In a sense, I think that their monetary policy is a little bit inconsistent because on one hand they raise the rate, on the other hand they still provide sheer amounts of liquidity to domestic banking system. The only difference that it's more expensive liquidity, but still this liquidity is needed for banks, and they expand credit, and that's why they push aggregate demand, and that's pro-inflationary measures. So I would think that the central bank, if they want to do tough monetary policy, they should constrain the amounts of liquidity they provide to the banking system. But tough monetary policy, as I believe, would be pretty much detrimental for the Russian economy, and I would prefer to see a softer monetary policy, even at the cost of higher inflation.
Since the tensions have not stabilised, a new round of sanctions by the US and the EU is likely. It has yet to be seen in the data, but many investors and officials are wary that the sanctions will be a headwind to the fragile economic recovery in Europe. But is Europe the most at risk at the moment? Just how damaging could the sanctions be on Russia moving forward?
Well, so far, if we talk about sanctions, their direct impact was minimal for the Russian economy. However, the problem is that not sanctions themselves, but the fear of sanctions is more damaging because it triggers capital outflows from the country, and that leads to deceleration in the economy. So the estimates suggest that every $10 billion in capital outflow reduce capital investment by about 0.5 of a percentage point. The impact on GDP is also negative, but smaller in absolute value. So not sanctions, but the anticipation, the fear of sanctions is more damaging for the Russian economy. Well, it's apparently true that if additional sanctions come, that Europe might also be affected. But I believe that the negative effect for Russia will be more pronounced than for Europe.
The yield on Rouble-denominated government debt due February 2027 jumped 20 basis points to 9.67%. The currency slid 0.3% to 42.9865 versus the central bank's target dollar-euro basket by 6 p.m. Now, markets have already begun to speculate. So do you see things getting better or worse for the ruble?
Well, I believe that for the last couple of months, the ruble is driven primarily by a political situation, and at the current level, I also believe that the ruble is undervalued, and this means that suppose that political situation improves, that some solution of Ukrainian crisis is found, then we should see a substantial appreciation of the ruble. So now only politics drags the ruble down, and it should appreciate once this political factor ease away.
Alexei, thank you for your insights today. Viewers, you can find out the latest developments on the currency markets by clicking back to Dukascopy TV for our early updates. But for me and for now, it's goodbye.